Good afternoon, everyone, and thank you for joining us for this timely discussion on the transformation and the future of grocery. I'd like to open by thanking our partner for this event, R5 Capital. Scott, thank you. I'm Halley Morrissey. I run business development at XRC Labs. For those of you who are newer to who we are, XRC Labs is an innovation accelerator for the next generation of disruptors in the retail and consumer goods sectors. We run 2 programs each year that bring together entrepreneurs, investors, and corporate brands and retailers to foster rapid innovation in retail and CPG. We have 9 corporate partners, retailers like CVS and Lowe's, as well as service providers like MasterCard and Accenture. All of our corporate partners rely on us to be predictive, truthful, and connected. Predictive means access to early stage startups. Truthful means thought leadership, and connected means access not only to startups, but to peer corporate partners, trade, and Wall Street. We built XRC Labs because the pace of innovation has outpaced the ability for corporate businesses to respond. Startups have the will and the enthusiasm to take outsized risks to achieve massive change and impact. They are willing to fail and learn quickly, and most importantly, learn from their customers directly. Despite the best efforts of corporate innovation initiatives over the last 10 years, the best products are still coming from startups. The XRC ecosystem consists of investors, startups, and corporate partners who come together to accelerate innovation and disruption that the consumer is demanding. We fund each startup with a net $100K in exchange for preferred equity and participation rights in future rounds. Our team of 12 works tirelessly to help build these startups. As investors, you'll find we fund early stage companies across the retail and consumer goods landscape. Over the last 4 years, we've invested in 80 companies, from consumer brands to solutions in next-gen commerce, supply chain, on-demand manufacturing, e-com, and the consumerization of healthcare. Within the consumer goods space, our breadth of investments is wide. These are just a taste of the consumer brands we invest in, from prebiotic waters to nootropics to superfood dog kibble and skincare for the gaming community. On the supply chain side, we've also invested across the board, from autonomous drones to labor optimization, spatial intelligence, and product information management. You can see a sample of the full breadth of our portfolio here. And our performance bears out the success of our focus and strategy. Since our start in the fall of 2015, our companies are performing better than better-known accelerators like Y Combinator on a cohort-by-cohort basis. Being focused and smaller has its benefits to our investor base. And finally, to continue to support the success of our accelerator startups, we've launched the XRC Growth Fund. This fund focuses on backing the winners, providing additional capital and operational support as a startup achieves their next level of success. If either the Accelerator Fund or the Growth Fund are of interest to you, please contact Pano Anthos at pano@xrclabs.com, and please reach out to me, Halley Morrissey, if you'd like to learn more about our corporate relationships. Now I'd like to introduce Scott Mushkin, founder and CEO of R5 Capital, to introduce the topic today and present R5 Capital's latest study. Scott, I pass it to you. Thank you.
Thanks, Halley. I really appreciate it. Thanks to XRC Labs for co-sponsoring this with us, and let's see if I can do the technology, which is always challenging to me, but here we go. I think maybe I did it. R5 Capital, just a quick introduction. People on the line don't know who we are. We do a lot of research into consumer. If we have an expertise, it's certainly into the in-home consumable area, although we do look at broader retail. We also offer consulting services, but I think we're probably best known for our consumer surveys, which I'm going to go through a little bit today. We just ran one, which I think has got a lot of great information as the panel, with the panel discussion. And we also do a lot of deep research, on the ground research, visiting stores pre-pandemic. We actually just kicked that off again. And there's the research consulting services. The presentation's available if people want it. So not a surprise here. So we've been doing bi-monthly consumer surveys to try to understand what's going on with the pandemic. And this is not a big shocker here at all. Given the pandemic, people are eating more at home, significantly more at home. What I think is interesting, though, they're spending more as they do it. This came up on the Kroger conference call. And when we have a COVID model where we look at how much money is being spent at the away from home food service channel, and how much will rotate to the food at home channel because of lock-ins, can't dine in. We bring that over about 50 cents on the dollar. So you're saving a lot of money if you're not going out to the restaurants. And so that enables you to actually spend more, buying the T-bone instead of the ground beef. Now, clearly the economy is difficult, and that makes some people be more price sensitive, but other people are spending pretty freely. So what's interesting, we call this the comfort index. How comfortable are people going out, going on an airplane, visiting a shopping mall, dining inside a restaurant? And what we've seen is, not surprising, with COVID now reemerging as an issue in places like Texas, Arizona, California, is that dining inside a restaurant, people were excited to do it. It's coming back down a little bit. Now, 100 is a maybe, a 200 is a 100% do it. 100's a maybe, a 0 is we say hell no. So none of these things are above 100. So still consumers are pretty leery, good for the food at home industry. So now there's been a lot said about this. We call it the COVID-10. Everyone's eating at home, everyone's nesting, maybe they're not being as focused as they should be on diet. Unfortunately, I think I participated in the COVID-10. But if you look at the consumer, you look at our survey, eating healthy, health products and services, buying fresh and organic foods, local foods, that still actually grew from 2017. So there's even more consumer interest there. And we know with COVID, by the way, that if you have a pre-existing condition, you're going to be more susceptible. So even though we all nested and we kind of let our guard down a little bit, I don't think there's a change in the consumer behavior here. The other thing that we're finding, and this is again maybe not a surprise, but private label continues to be a big driver. People are more willing, and this is good for the retailers, to buy private label. And so what's happened during the pandemic? The pandemic has led people to rediscover their local grocery store. Now, Walmart is certainly part of this too. So the question is, which retailers and services are using more as a result of the pandemic? Walmart, big retail. But look at that local grocery store. And we know this from what the companies are reporting. Some of the strongest sales gains are coming from the likes of your local grocer. And so this is an interesting phenomenon that we actually think could continue, because as we think out into the future, we believe that there will likely be more food at home occasions. And that's good for the grocery store. So, but they're also discovering delivery. Look at these numbers. These numbers are insane. You got almost 50% of the people saying they want to have, it's not all their shopping trips. And I think we get confused that way. We say, oh, well, it's only 15% at Sprouts, the Omnichannel, but this is saying 27.7. But consumers want Omnichannel. But you see this, 50% of the people are interested or either using. Stunning increases from 2019, just absolutely stunning. And what's also interesting, given what the retailers have done, is it's preferred over pickup. And so that really leads us to also, they want to purchase online. And these numbers, again, are somewhat stunning, but the reason this is, and they dry groceries, household chemical and paper, personal care items, these things that you buy all the time, consumers, even more than they did in 17, want to buy it online. Why? It's a have to do, not a want to do. It's a chore. And our data shows this, where some of the categories that score the worst, as consumers think it's a chore, are these recurring consumable categories. So we always say omnichannel, when, where, and how the consumer wants it. Amazon understands this. Amazon and Whole Foods, they're building 100 stores at least. Doesn't get much press right now, but Amazon is coming in a big way. And delivering a true omnichannel experience profitably is challenging. And I think the panel is going to talk a lot about this. Micro fulfillment, pickup versus delivery, Instacart versus build your own. I think that's a fascinating discussion. Hopefully get that into the panel. And then right sizing the store fleet. How many stores do you really need? With that concludes my discussion. I'm going to throw it back to Halley and Halley, excuse me, and I think she's going to introduce the panel.
Thanks, Scott. Appreciate it. I'm pleased to introduce the rest of our speakers today. First, we have Walter, investor and mentor to the next generation of American food companies and former co-CEO of Whole Foods Market. Next, we welcome James, CEO of McCann Investments and Advisory and former CEO of Tesco, among other major grocers. Also, we have Pradeep, CEO of Farmstead, a grocery startup focused on delivering minimally processed farm fresh products to doors in 60 minutes or less. And moderating today's session is Pano Anthos, founder and managing director of XRC Labs. Before I pass it to Pano, I'd like to encourage the audience to submit any questions you have through the Zoom Q&A function, and we'll ask them at the end of the session. Pano, I pass it to you to moderate the conversation with our panelists. Thank you.
Thanks, Halley. So we're obviously dealing with a seismic shift in consumer behavior as it relates to grocery. And so I'm really excited to have a very esteemed, super smart panel to really kind of hack away at this, because literally this is what we're dealing with today. No one's got the crystal ball. We're all working with something less than optimal. So the first really is for all three of you, what's the biggest wake-up call you've gotten out of the COVID impact? And are grocers really set up to kind of deal with that wake-up call? Any one of you, James, Walter, Pradeep, let you guys kind of run at it.
Well, this is Walter. I'll jump out there. I think, you know, the thing that was different than anything before was the surge in demand that happened the first couple of weeks. And I would say that's continued in terms of just the fierce urgency of now. This COVID throws a curveball every day and is requiring grocers to adapt to that situation, whether it's inventory levels, whether it's SKU rationalization, whether it's the health of the workers or the health of the customers, the fact there's less trips, all these things. But the surge kind of highlighted that and put the food system square in the middle of the lights of you know, what's good and what's not so good. And I think, you know, grocers have done a fantastic job adapting, but I think we realize just how essential the food system is and what the things are that we need to work on and what the things are that came through really well.
Yeah, I'd build on that, Pano. I think, you know, never in history have we seen the restaurant industry just shut down. The US was a 50-50 market between food at home and food you know, away from home, and the food away from home just came to a dead stop. So, you know, exactly as Walter said, the thing that fed America was the food, the grocery channel, and how essential that industry was and how quickly it had to adapt, you know, was astonishing. I don't think anyone, you know, we've all seen hurricanes in particular geographies, but we've never seen the entire country, and in fact, the entire world, have to react in such a big way and in such a sustained way. And I think the questions it throws up is, you know, how much of the change in behavior is going to stick looking forward?
And
Yeah, perfect timing.
This was a very interesting period for a company like ours. So we do online grocery to doorstep. And what we've historically seen is at any point in time, there are maybe for every 1,000 customers who walk into a supermarket on a daily basis, we have maybe 100 or so who want to do delivery to doorstep. And with COVID, that just flipped. And I think that was the cause of a lot of the havoc that happened right after doing shelter in place and quite frankly, continues onwards. The overall capacity for delivery slots for 130 million households is quite poor right now. My estimation is we're looking at about maybe somewhere between 5 and 7.5 million delivery slots a day for 130 million households. So we're in kind of a tough spot.
And was that the reason that you had to put up a wait list, Pradeep, on your site? Because I saw that on your site. You recently released your wait list, right? And so you're back to full operations?
Yeah, so we usually do pre-COVID in the hundreds of orders per day. And during the first 3 or 4 weeks of shelter in place, we had the opportunity to service 4,000 to 5,000 orders per day, just based on the traffic that was coming in. And we were not set up for that. And I don't think anyone in the industry anywhere is set up for that kind of a surge. And as a result, we literally had to turn on a wait list. One of the bigger reasons we turned on a wait list is a lot of those people who were coming in were at-risk customers who literally could not go to a supermarket, especially in the very early stages of shelter in place. So we needed to find ourselves some breathing room to figure out exactly what we wanted to do. So we turned on the wait list. We prioritized the at-risk customers. So if you're self-reporting yourself as at risk, then we will prioritize those orders for you ahead of everyone else. And we had to put in a bunch of systems to make sure that we could survive, and more importantly, get customers delivery to doorstep. From a supermarket standpoint, most supermarkets are on average doing about 150 online orders even before COVID per day. So they were also overwhelmed, and generally capacity in this country is so poor for online grocery, primarily because, you know, it's a $1 trillion space and there's only about 4 to 5% online adoption prior to this.
Well, we're going to come back to this because it's obviously a big gating factor for the delivery of retail, grocery to end customers. I want to shift for the moment into kind of brands and ask the question, so if delivery is there's been a big surge in orders, what is the constitution of those orders and what does that mean going forward? We have an opinion that obviously private label is growing rapidly, right? It's 30% of Kirkland is 30% of Costco's sales. It's 25% of Thrive's business. Targets has released Good and Gather. So is COVID accelerating this move to private label? Does it have any impact on it whatsoever? What are you seeing in this respect? And is it affecting negatively the commercial brands?
Look, I'm going to go back, Walter, go back again and just highlight one thing, which is that what we're seeing across all the retail is less trips. Okay, and Scott's data kind of highlights the fact that in retail, the trip is precious, just precious. And the trips have stepped back significantly. The basket is gone up to counter that. So when folks come out, but the nature of it is that with the store, the way it's set up now, the physical store, it becomes more transactional. There's much less of a value put on merchandising, et cetera, because folks want to get in and get out. And so, you know, whether it's the reduction of SKUs or whether it's the fact that you're flattening or spreading out your displays or whatever, I think the advantage that physical stores have had from a merchandise perspective, particularly a retailer like Whole Foods, is minimized as a result of this change in circumstances that we're in right now. Now, as to your question, I mean, it sits within a larger your view of the economy. My own view is that in the back half of the year, Q3 and Q4 are really going to be a test because we still have 20% unemployment. We have a question as to these the sugar money and the necessary money. Is it going to continue to come, or in what form? I think we're going to have food inflation, which is up 4 or 5%, but you have a question about who's going to pass it through and who's going to try to go for share. And so I go only back to, I don't know, but I think the second half of the year is going to tell us a lot about, you know, what we'll push on through here. On the other side, we may lose some retailers. We certainly will. And even while some are growing. But what we saw in 08, 09 was that when the economy was challenged, when there was a recession, that we saw private label go up about 200 basis points at Whole Foods. And so the customer, you know, obviously we also saw them trade down into the middle of a category as opposed to take the highest price points. That was for the majority of customers, not for the top level premium customers. So I think that private people still love their brands, and we're seeing that with respect to pivoting back to comfort brands. We're seeing that some of these CPGs we thought were dead come back alive with brands that folks would be embracing for the fact that it feels good. But if in fact the economy becomes more challenging in the back half of the year, I would expect, based on what we've seen before, the customer's going to push a few more dollars into the private label as well to get more value for their money.
James, Pradeep, any thoughts? Yeah.
I think I'd agree with that, but setting it in a broader context, you know, the US market has been an anomaly globally in terms of private label penetration. Much of the private label penetration in other markets happened in the sort of late 80s and 90s, when retailers really became very good at developing their own products and their own brands and truly made them into brands and became very innovative. And I think that didn't happen in the US. There were very powerful suppliers, and they paid a great deal in terms of trade funds to protect their shelf space, and the retailers did not make the same journey. You know, I think it was probably Kirkland and Trader Joe's that kind of broke the mold in the US. I think all of the grocery retailers have been on this journey. Walmart's been on this journey for the last 5 or 6 or 7 years that understood the importance of private label because it differentiates their brand from all the other brands in their marketplace. And I think that customers, younger customers, the millennials, and the earlier ones than those are much more willing to try private label. I think all consumers have become unanchored, unmoored from their existing behaviors over the last 3 months, primarily because there's been such a product shortage. They've been willing to buy whatever's available on the shelf. And I think, as Walter was saying, we're going to see, a difficult economic situation in the second half of this year, which tends to lead people to look for other solutions, to look for cheaper solutions. And all of that, I think, just is a tailwind to the retailers developing their private label. So I think between the retailers pushing private label, the consumers looking for those solutions, and at the other end of the scale, young, innovative brands really, truly differentiating, I think that's where the larger brands have been and will continue to get squeezed because they're not moving quickly enough and innovating quickly enough.
And Pradeep, do you have a private label model underway?
We don't, but I do suspect there is there's some noisiness in these numbers here. What we did see over the first few weeks of shelter in place and continues on is a dramatic increase in the amount of production shortages for the products that we're selling. So in the scenario where you have an option of choosing from a private label version versus you're buying the primary CPG, if the primary CPG is out or vice versa, then you may wind up preferring the other. Having said that, I do agree with Walter that the end of the year should show a little bit more clarity on what's going to happen here. We have spent a lot of time working towards mid-market shoppers, and these are the people who shop at the Safeways and Krogers of the world. Sometimes they go to Trader Joe's, sometimes they go to Whole Foods. And for these folks, it's really, can we get prices as low as possible? And they are a lot less brand sensitive, but if you can get the primary CPG brands that they know and love down to the prices that they're looking for, then they're more than happy to purchase those. As long as, of course, it's actually available to purchase, which still seems to be problematic for some items.
Right. Now kind of as a contra to private label, there's been this big push toward health and wellness, right? Plant-based products, sustainability, a lot of noise in this sector. And when you look at on the sustainability side of things, how are stores rethinking their supply chains around transparency? I mean, look, delivery is not carbon neutral, to say the least, right? It's very expensive on one level. Where does this kind of sort out, and how are people taking the narrative on health and wellness in this kind of COVID platform?
Well, continue. I'll just jump out there unless you want to go first, James.
No, you go ahead. Okay.
Well, I mean, the interesting thing is in some ways with the environmental journey, we've taken a step back because of food safety and because of health and safety. So, a lot more single serve packaging, obviously at Whole Foods, there's no more the salad bars and all that food service, all that stuff where people didn't want to buy food that was exposed. And also even in the fresh meat and seafood, there's been some more concern about customers buying it. They'd prefer to buy it packaged. And so I think there was a big article in the Journal earlier this week about how all the major CPGs have not been able to meet their goals with respect to recycling and packaging because it's just not a time where that can happen. I think though that the overall narrative around the move to, it wouldn't be surprised you to hear me say that I believe that Whole Foods plant-based diet is a pretty healthy one and is there for the long term. You've seen Pat Brown from Impossible Foods go on CNBC and declare that in 5 years it will replace meat. You've got other folks out there, and they've got pretty good sales trends on that first generation product of Beyond Meat and Impossible Foods. So I think more broadly that the customer, as the healthcare, obviously the healthcare system has stepped up big time during this time. And I had COVID in March and April, so I can tell you I'm a veteran of that, and I was a beneficiary of 3 nights in the hospital, which I haven't been in 30 years, but nonetheless, the underlying move towards what I call the new food revolution, which includes plant-based foods, which includes the functional foods, which includes this whole new generation of medicinal foods that are being created as science and technology weigh in on the food system. but as well as just the transparency around food, as you mentioned. These are fundamental trends that are going to continue to develop over the next number of years, because they're grounded in basically the customer saying, I want to be healthier, I want to live a healthier life, and so I see those trends staying intact. There's a bit of a sideways move here with respect to the comfort brands and with respect to some of the other short-term fixes that are necessary for this time that we're in, but I don't see them derailing the overall long-term trends that you've mentioned.
Got it. So it's just a blip. We're dealing with a blip. Pretty
well. It's a hell of a blip. It's a hell of a blip. But, blip probably calls
a bloop. It's more of a bloop than a blip, right? James, Pradeep, anything to add? Because I'd love to move on to just what does the store look like in the future, unless you guys have something you want to add to that.
I will add that we kind of have a captive audience at this point for trying out new products. Everyone's cooking again. So we are seeing plant-based items fly off our shelves. They were flying off the shelves before, so it's a little bit unclear what exactly is going to happen. But having said that, I think the quality of those products have also, the timing is pretty well in their favor right now. So I saw that Impossible was doing directed doorstep delivery of frozen meat patties. Well, not meat and quote patties.
right.
I think we're gonna. Oh, sorry. I thought you finished. Go ahead.
I was saying it's a little bit unclear what could happen. I think the cadence of shopping, whether you're going to the store or you're buying something online, usually people buy just the staples when you are placing delivery orders. And to someone's point earlier, maybe we were having that conversation earlier about they want to get the heavier stuff delivered, and they'll try to stay away from perishables. All of that's out the window right now, especially with delivery. So they are looking for interesting new products to purchase, because shelter in place, one thing that for a fact is routine and repetition. So whatever you can do to break the pattern and introduce something more novel in your lives, people are trying to do that. So a little bit unclear.
Yeah, James?
I actually think the single biggest shift that will happen, that has happened because of COVID, that will accelerate a lot of the trends we saw before, is there are now probably 2 entire generations that have learned how to cook. Everybody previously, I think, was starting to understand that you are what you eat, the importance of the microbiome and all that good stuff. A lot of people didn't have the fundamental cooking knowledge. And I think that the COVID has forced people to learn how to eat, because many of the prepared meal solutions and the away from home solutions disappeared. And I think that's going to have a very big impact on people's future behavior after we get an effective vaccine and people get back to, in inverted commas, normal.
So you think people are going to still continue to cook, even though it's time consuming?
I think people have developed the skill and knowledge to be able to cook. I think prior to this, there were many people that in their households, however that's constituted, they didn't have the knowledge to be able to cook. And I think they've been forced to learn how to cook over the last 3 months.
And Panos, a little nugget for you. I think this came from McCormick Foods. The most searched term has been, what is a teaspoon? To James's point, a lot of people didn't know what a teaspoon.
That's pretty scary, isn't it? Really scary. So I want to actually get to like one of the big kind of like elephants in the room, not our room, but in the grocery room, which is what's going to happen to the center of store. I mean, let's be honest. Why do I need to walk in to buy a box of Cheerios anymore? Or anything that's non-perishable, shelf-stable, repetitive, why isn't this all just going to come out of a warehouse coming forward? Anyone?
I agree. I think that by 2030, half the grocery stores in the country, the centrales, in the way they are today, as a stocking point for customers to pick up stuff and put it in the shopping cart, will have disappeared. I think that it's such an inefficient and unpleasant process for both the associates working in the stores and for the customers. And it's so inefficient that it's going to be rethought. And what's going to happen is, a retailer or two are going to rethink it. They're going to trial it, realize that they can do this, use technology, a combination of, pre-ordering or ordering in-store on app and micro-fulfillment at store level. and they're going to realize that they can take 10% out of the cost and then give the customer a massive financial incentive. And as a result, the center store aisles will disappear very quickly across many, many retailers. Anything that is heavy, bulky, or boring does not have to be picked up by a customer from a shelf and put into a shopping cart and then manually scanned through the front of a store. It's a completely stupid thing today.
And you think it's 10 years? Why isn't it like 3 years?
Well, because you've got to relay, there are 50,000 grocery stores in the US. So you've got to relay them, and you've got to put in place the equipment, the micro-fulfillment solutions. And at the moment, there's probably only capacity to do 300 or 400 of those a year. And if you're going to be doing the core grocery shopping, remember now we're not talking just about e-commerce that's being either picked up or sent to people's home. You're talking about the actual shopping that they're doing. So you need to be able to, when she walks in the store, you need to be able to pick the items that she wants in the 15 minutes prior to her arriving at the front of the store in her car to take them away to home. So you have to have a local micro-fulfillment center. But you can easily take 1,000 basis points of costs out of the end-to-end supply chain if you put in place a new solution and don't fill up shelves in the store.
And Pradeep, do you feel like it's going to take that long?
I hope it doesn't take that long, but I'm also curious why it's restricted to non-perishables. I think, there's a segment of people in the US who have historically wanted to go and pick out their produce and buy just the right amount of non-perishables that they need for the week or maybe for the next 2 weeks. But I grew up with delivery and I don't like going to stores anymore. So I'm curious why I can't get perfect orders of perishables and non-perishables delivered in whatever cadence that I want.
Oh, Pradeep, just so we're clear, I'm saying, so I think that home delivery is going to grow. I think that pickup, ordered online, pickup in store is going to grow even quicker. But what the question I was answering with Pano is the core grocery shop, the non-ordered online piece of it. I think all of the center store element of that is going to disappear and will not be physically present in the stores in the way we see it today. So the actual aisles in all of the 50,000 grocery stores are going to disappear in the way that we see them today in stores and be replaced by display stock essentially and micro-fulfillment solutions at the store level.
Potentially, I think the cost of delivery from a warehouse, unless you're doing local delivery with trucks or vans or cars, it's a lot cheaper in the mail if you get the right unit costs and the right weights. So there is a path there, but as we've kind of proven out, there's also a path for doing local delivery for all of these things as well. So it's a little bit unclear. I think it's a function of demand, and I think this is demand and building demand for various omnichannel situations is not something that honestly a lot of people talk about in this industry, but it actually is the core for driving any real substantial unit economics and changes in store level dynamics. Because if you're relying on, as Walter mentioned before, if you're relying on 1,000 trips a day from someone in a 3 to 5 mile radius, then you'll do everything possible to structure your stores in that way. But if those people disappear and turn into delivery customers, then your stores will of course adapt.
But let's get back to the perishable question, because a rotten tomato is a rotten tomato. A ripe tomato is a ripe tomato, but that's a very subjective, qualitative look at things, right? I mean, how ripe is ripe? So,
right.
You run the risk, Pradeep, of shipping me product that I'm not satisfied with. Are you encountering that? Or do you just not bother with tomatoes?
Oh, no, we sell the tomatoes. We sell exceptional tomatoes. And we make sure that the tomatoes that get to your doorstep are pristine, because we always run the risk and it's our reputation. So when you're thinking about a store format, I think one of the best things that the grocery industry has done over the last 30 plus years is convincing everyone in the US that it's a brilliant idea for them to go drive to their stores, pick out produce that may or may not be of questionable quality from their big fridges and take it home to your small fridge and pay them for the privilege. So my question is, if we know that our reputation rests on tomatoes and avocados, why would a company like Farmstead not prioritize getting the best possible supply chain for those tomatoes and avocados so that the risk of you getting that good experience is incredibly low?
Then how do you scale that though? you can do it in a small locale, but how would you do that nationally?
The way we are solving it is we have a multifaceted approach, specifically from a supplier standpoint. So one, it's all about the quality of the produce that's potentially hitting your hub. Once it gets to the location, to our warehouse, then there's stuff that we can do to manually do the things that other people do at supermarkets. But the supplier relationship and our ability to scale that nationwide goes very far. And I mean, that's a much longer conversation, but I think the takeaway here is really, if someone cares about delivery of produce, if some entity cares about delivery of produce, that entity is extremely incentivized to make sure that your tomatoes are pristine. And our produce qualities is exceptional relative to whatever is coming out of supermarkets in the area.
That may be true, Pradeep, but I mean the concerns you have from customers on whoever their provider is going to be is usually out of stocks, substitutions, wrong substitutions, and or they don't necessarily would rate the quality of the perishables at the same level as they would in store. So I would say a couple of things. One is to get to James's target date, but what's happening here is the value of experience in retail, which has always been the reason to go to the store. Every retailer is having to rethink how they deliver an experience that makes it worth the trip, right? So particularly when it's become sort of so transactional now, get in, get out, versus some sort of a discovery journey, which me personally, as a lifelong grocer, almost 40 years, I love going to the grocery store. So I'm maybe a little bit of an old person here, but I love the experience. I love the experience you're able to provide customers, particularly on the fresh aisle, where you can talk about product, you can talk about how to cook it, you can talk about the grower that's raised it. The question is going to be, how will grocers of the future, create those experiences that make the customer want to come in and spend the time and enjoy the store? And we're already seeing different grocers experiment with different sorts of formats. You've seen recently in the last week with Starbucks announcing their micro Starbucks stores. So, Kevin told me he's doing, if a typical Starbucks is 1,800, 800 square feet. It's primarily for pickup in different parts. So personalizing the format to the neighborhood or the customer base that's using that store. You'll see Nike talking about smaller store formats again. So I think these formats, convenience-led formats, as well as, the formats, there'll be a lot of experimentation with formats and how to deliver an experience that's right for that group of customers or that community. Scott mentioned the resurgence in the local grocery store. I think in general, people have become much more aware and appreciate their grocery store a lot more than perhaps they did before. They might have taken it for granted. And so what that translates in terms of long-term loyalty to be seen. But the fundamental trends around technology, automation, around the ability to do the center store stuff that James talks about, they seem pretty real to me, and economics have not really been worked out yet. But I think this experimentation, this which is the nature of retail at its core, is to figure out how you're going to serve your customer, and it's going to be an interesting development over the next number of years.
So with the time we've got left, because this is a big topic, I'd like to really introduce the frenemy, enemy, friend, whatever you want to call them, called Instacart. And I draw an analogy to what, and I'm not trying to embarrass anyone from Target on the call, but Target used Amazon for its e-commerce platform for years, as did Toys R Us, which you just would think is like the cat, letting the cat in the hen house kind of thing. Is Instacart the same analogy, where essentially the entire customer experience is going to be completely owned by Instacart? Is this a long-term solution for grocers, or is this a kind of a dive off the cliff, so to speak?
Well, go ahead, James.
I mean, my view, Pano, is that Instacart was a quick solution to how you solve for e-commerce when it wasn't that important and wasn't that material. And the issue now for the industry is that e-commerce has become much, much more material and is likely to become even more so in the future. And if you just look at the customer journey now, if you're a retailer, your customers are the core of what you do. The customer lands on the Instacart page, orders, on the Instacart page, pays on the Instacart page, and the person who delivers it to them is the Instacart person. So the grocery industry is in danger of becoming just a third-party logistics services provider to Instacart. And, you know, as a customer, it is significantly more expensive to order on Instacart. And I think the only way that the business model works, once the venture capital companies stop deciding to fund it all, is that the trade funds that currently go to the grocers have to be somewhat diverted to Instacart. And the grocers live off that money. So I think there's a very, very challenging period for the grocers coming, because many of them that are, you know, highlighting their very rapid e-commerce growth, the dirty little secret under the covers is that 70 to 80% of that growth on delivery is coming from Instacart. And is, you know, from an accounting perspective, you could even argue is potentially not even their sales, because they're just moving along you know, the supply chain. They're providing a service to Instacart. I think it's a huge issue for the industry, and we're going to have to face into it over the next 3 or 4 years.
Yeah, this is Walter, and we did the first deal with Apoorva and the team at Instacart because we had no answer for e-commerce, as James pointed out, and we needed to get in that business, and it put us in that business overnight. But we had a roadmap to essentially move to a white label where we moved our website forward, and then the big item that is the data. You know, if you don't capture the data on your customers and know who they are and what they're buying and be able to look at their basket and the adjacencies and the analytics, then you're really in the dark in terms of growing your business going forward. So I don't know all the arrangements Instacart have with the different customers and how those questions have been sorted out, but I know our board was very concerned with having that be, you know, with the long-term nature of such an arrangement, so that we had to own our own information. And ultimately, obviously, with the sale to Amazon, Prime now replaced Instacart. But the real question is, how will you've got to be in this business? The customers have made it very clear they want it and they use it. They also want to pick up at store, by the way. The growth there in June for the Nielsen numbers I saw were 2x delivery. But you got to be in this business, and you got to have some help getting in it, particularly if you're a smaller grocer, because it's expensive and you got to know what you're doing. Instacart gets you in that business quickly, but the questions become, as James said, whose experiences are you delivering, and then who owns the data, so that you have that ability to continue to develop the relationships with customers and serve them well.
Well, Walter, let me ask this question, and I'm going to push this to Pradeep in a sense, is that grocers have owned a lot of data for years, almost more data than just about any other retail type. You know, frequent shopper data has been around for a very long time. And as a consumer, I have never gotten an email from a grocer, even Whole Foods, and I used to shop it a lot in my previous suburbs, you know, and I was a regular meat buyer. No one ever pinged me and said, you remember that Prime or whatever you bought last week or last month? It's on sale again. Not once. And so my question really is, and I think Pradeep, this is where you're headed, is data doesn't seem to be something grocers know how to use. Pradeep, you want to speak to that? And I'll have Walter counter what I just said.
Let me take a step back for a second about the Instacart question. I think Instacart was a great option for grocers who were running scared when Amazon showed up, and they wanted to stack on an e-commerce position as rapidly as possible. Unfortunately, Instacart is a classic tech company in that it fits in between the seams of multiple businesses and builds the relationship with the customer and takes their cut. Those companies get really big really fast. And it's also very possible to take over markets in about 6 weeks if you have the right set of performance marketing, et cetera. So it puts the grocers in a tough spot, because now their customers are exposed to some of their other competitors inside an app that they don't control. They don't control the data either. And as Scott and James mentioned, Walter and James mentioned, we're looking at the data not flowing through. Neither do they know what exactly is happening. The customer, once they place the order, they don't control the experience. There is a JSON model that works in software. And I don't know if you guys remember Grubhub back in the day when they were a pure software play, where they provided just enough software for the restaurants to do what they needed to do with their own people. There is a path there, but that path gets you a lot less of a per transaction take than what Instacart is currently doing. But that path is a much more amenable path, because it allows every grocer to look at the overall technology landscape and say, okay, I can do my own pick, I can do my own labor, and there's enough technology available to make those as efficient as possible. So maybe I'm not getting the 2 to 3% net that I get at a store. Maybe I'm getting like half of that, but it's still over zero, and it's still not negative 20. So from our end, we have been spending a lot of time with grocers trying to understand all these dynamics. I think the path where Instacart is rapidly getting removed from grocers' technology stacks is unfortunately inevitable. A lot of the bigger grocers, and this is public information, a lot of the bigger grocers have invested heavily in their own consumer apps. Safeway has actually a pretty decent app, and so does Kroger. And those apps are the new stores, essentially, as the rest of those customers who are previously shopping in store are now going online. And for those apps to start becoming a lot more performant from a unit economic standpoint, they have to be backed by better in-store operations. And the technology that powers in-store operations is also catching up. So there is a moment in time in the future where a grocer, can actually put together a decent enough solution to replace most of what Instacart is doing, and maybe even add additional capacity beyond the 150 to 200 orders that are going live. The challenge is doing it well. And our thesis is that, yes, you can get to maybe a little bit better than break-even economics when you do this out of supermarkets. But if you really want to drive from that 2 to 3% net that you see in a big supermarket chain to something closer to 10, 15% net, you have to go down the path of, first you'll go to your own stores, then you go to dark stores, then eventually into a warehouse that does perishables. And that's the work that we do.
So we've got about 10 minutes left, and we've got like 30 minutes of questions coming in from the audience. So I'm going to turn this over to yeah.
I just want to say, you're right about grocers collected lots and lots of data. Who remembers the first generation of loyalty programs? But grocers never used the data. What you're seeing different now is grocers actually using the data. I know, for example, we didn't have those capabilities at Whole Foods. We didn't have the analysts and the people to be able to translate that data into action steps. But now there is that team there that's doing exactly that, plus a partnership with Nielsen. So you're getting a look inside every customer's basket, adjacencies, merchandising opportunities, and you see Kroger does a decent job of this as well. So grocers are now in a position to put the larger ones in particular, put themselves in place to use that data. So I agree with your characterization earlier. I just want to say I think that's shifting as people realize the futures in the data, because that's the information about the customers.
Yeah, and we're going to get hit with lots of emails is what it sounds like, which is fine. I do want to turn it over to Halley to start fielding some of the questions that have been kind of hitting our Q&A bucket. Halley, can you take over?
Absolutely. Thanks, everyone. Okay, so the first question. So much of the in-aisle grocery shopping experience is sampling, browsing, and hand selecting your food. With this major shift online, how do you envision retailers like Whole Foods Market recreating that experience to drive trialing, sampling, bigger baskets, bundling, discovery of new brands, etc.? I know it's a long question, but perhaps we can do a bit of a rapid fire here. Or you can pick the piece that's most interesting.
Well, the question is right, because right now that's, as we've talked about, not what people on people's mind when they come in the store. But Costco started up demos again. Whole Foods has not yet done that. I think grocers are going to have to find their way. We're in the food business. We're in the fresh food business. We're going to have to find a way to share that safely. And I think that's going to be figured out. But it's not the number one thing on shoppers' minds right now.
I think my answer to that is it links back to the prior point around data. So a combination of the grocers, the bigger ones especially, becoming better with data set becoming more fully filled out, because at the moment the grocers only see their part of the world. There's at least one startup I'm involved with that's trying to build a sort of much fuller picture of what the data is around the customer. And then I think much better suggestions engines, for instance, like Halley, that are bringing artificial intelligence to suggestions, which I know that Pradeep's even working with, is going to be the way that online is going to start to give you the same kind of suggested commerce that you experience in the stores. That would be my guess.
Thanks, Walter. Thanks, James. Okay, on to the next question. This is a good one. Which U.S. grocer is best positioned right now to grab more of its fair share of all the incremental food at home spending that's taking place? Is it Walmart? Why or why not?
Go ahead, James.
Yes, I think it probably is. You know, I think that people are, as Walter was saying earlier, people are doing fewer, bigger shopping trips. I think that Walmart is going to have an advantage in the second half of the year when people are short of money. I think that you can now get the Walmart prices, the Walmart assortment, without having to go into the Walmart store if you wanted just to pick up the store. So I think, you know, everything is in place for Doug and the team at Walmart to have a very good second half.
I agree. I think Doug's done a fantastic job. But I would say, generally speaking, I think every single grocer deserves a shout out for doing a pretty darn good job during an incredible period of time that they didn't see coming and were hit. And all of them have benefited probably at the peak at the 30% year over year, and now probably 15 to 20%. But I would say that, you know, I like Walmart's chances because they have done a nice job integrating their e-commerce. They folded Jet.com in, and they're getting better at that. Amazon, you know, they're going to build a lot of grocery stores, so they're determined to do that. And I think Scott had a slide up about that. So I think, you know, those two, Amazon and Walmart, are going to kind of define the playing field a little bit in terms of pricing, in terms of selection, in terms of services. We're going to have to see how the others do with respect to those variables.
I do agree with Amazon coming in a big way. I think it's a little bit interesting when you think about the demographics that shop at each place, specifically the Whole Foods contingent and maybe the ones that shop at Prime Now versus the ones that shop at Walmart. It is pretty clearly bisected. And as a result, it's a capacity problem, the way I see it. If it's a delivery question and who's going to capture most of the delivery, then whoever can provide the most amount of delivery slots for same-day delivery is going to win. And if it's Walmart, there is that unfortunate Walmart disadvantage just because of the brand when they're talking to customers who are mid-market and have also been used to shopping at Whole Foods. But for Amazon, they don't really have that restriction.
Thanks, everyone. Okay,
Halley, I also think that, you know, and Scott kind of alluded to it, but something nobody's talking about is that Amazon is very determined to build a mid-market grocery operation. So they're going to have Whole Foods as their sort of upmarket brand, that they have, you know, I know of at least 60 locations that they seem to have already signed up, you know, on multi-year leases. Mm-hmm. And I'd imagine the number's probably more like 100 for an Amazon normal, if you like, grocery store, which is going to, you know, be very focused on bringing micro-fulfillment at store level and probably merging with the non-food with the food operation. So I think, you know, that is just below the surface. They declared, I think, 4 or 5 of the locations for planning, building permit purposes. But there are a lot of those locations and not many people are talking about them.
Thanks for raising that, James. Okay, this is a very specific question. An unfortunate product of COVID is single-use packaging waste, which you mentioned, Walter, since there's a negative connotation towards reusable packaging potentially carrying the virus. Do you believe there will be an increased focus on antimicrobial and or reusable packaging systems for the growing online food delivery and pickup industry?
Yes, I mean, it's got to happen. I know all of the major players are, you know, seeking solutions. I'm involved with an e-commerce logistics company called Green Rabbit on the board. You know, we're looking at solutions of soluble packaging where you can actually basically dissolve it in water. And I think there are going to be many innovative solutions to this problem because, you know, what's happening at the moment is pretty horrendous from a planetary perspective.
Right, and I would say we're eating the equivalent of a credit card a day, I guess, in plastic, the way things are right now. But I would also say that the food safety, there's a lot of software developing to help the producers produce food more safely and not waste the food waste, and also the food transparency. So I think you're going to see evolution in systems both for the packaging, food safety, food waste, and food transparency.
Thanks, guys. Okay, this is an interesting one. Does hyper-accurate wayfinding reduce basket size, or does it, as it gives the customer time back to engage in discovery and impulse buying as they make their way to their destination? or does it reduce the basket size? Increase or reduce basket size if you give them hyper accurate wayfinding? That's the question.
We'll see. Honestly, that could go either way for me.
Okay.
Agree.
Okay. Next question. How does Kroger Ocado fit? Seems a closed loop is much better versus using Instacart.
Well, I mean, it seems like Ocado is part of Rodney's answer to the New World Order, which is to say he's trying a lot of different things. He's got the pickup, the delivery. He's got the fulfillment through Ocado, which is they're trying different sizes of those fulfillment centers. So I think the question, they're trying to find their way to what's the right combination of partnerships and technologies to get them where they want to go, which is to be serving the customer. So early innings, we looked at Ocado early on for Whole Foods and couldn't make the economics work, but that was a few years ago. It's a highly roboticized facility versus others who are taking a more combination of workers and robots together. So I think it's TBD in terms of that, but it's certainly, it's a proactive step on his part and Kroger's part to try to figure out and solve some of the questions Pradeep was talking about earlier.
I have a more negative view on Kroger Ocado. I grew up in European retail and European e-commerce. I think with the US densities that we have, between suburbs and exurbs, I think unfortunately Kroger is going to find that the CFC is they can't build many of them and make them profitable. I think probably with Kroger's footprint, my guess is there are 5 or 6 of those that they could build and run profitably. I think the ones that they build in geographies where they don't have the density that they currently operate are going to be unprofitable. And I think the ones that they're building in new geographies where they have no business and they're going to try to build from scratch, I think they're going to find that those are horrendously unprofitable. I hope they uncover these lessons quickly and they can redirect the strategy. And I think, if I'm right about 2030, when much of the heavy, bulky, boring, non-perishable proportion of the store needs to be done by a robot at the store level and be ready in 15 minutes at the front end, that is a disaster if you've centralized your fulfillment and it's 4 hours drive away. So I know that model extremely well. I've competed against it. I've looked at it in terms of, as Walter was saying, in terms of implementing it. I really think that 20 of those in the US is a huge mistake on Kroger's part.
Thank you, James. Thank you, Pradeep, Walter, Pano, Scott, for the lively conversation today. To all of our audience, thank you for joining. If you have other questions, please do reach out. If you'd like to learn more about corporate relationships, please reach out to me, Halley Morrissey. Thanks, everyone. Have a great day.